welcome to Raju Rao Accounts. Today, in continuation of our depreciation chapter, let's take some main problems which have appeared in the examination. See, the first our problems have kept it in the description. There is a link there. Okay, if you go through the link there, then you will know the what problems we are doing it here. All these have appeared in the examination only. So I want you people to have those problems before you are attempting this. Okay, come on, let's see our first problem. See, here what I have done here is, in this problem there, he has asked us to do one machinery account, and machinery account he has asked us to do. So here more than that of one machine is there, so I am bringing it working note here. So don't think that this is a problem, this is a working note. I have drawn in one particular statement manner there so that it will be easy for you to calculate it. Okay, so I want you people to follow this particular statement also, so that doing the problem will become very much easy for you people. Okay, come on, let's go through this problem. On 1st July 2010, a company purchased a second-hand machine for 8 lakhs and spent 1,20,000 on overhauling. Okay, that means totally 8 lakhs plus 1,20,000, 9,20,000 is the cost of the machine which he has purchased on 1st July 2010. The company has purchased another machine on 1st July 2012 for 4,80,000. So this is the second machine which he has purchased in the year 2012. On 30th June 2012, that means the same year on 30th June, what happened? The machine which was purchased on 1st July 2010, that means the first machine which he has purchased, it was sold for 3,20,000. And on 1st July 2012, that means on the same day, then the next day, he has purchased a new plant, okay, was installed at a cost of 6 lakhs. So totally, the company provided depreciation at 10% on the original cost. The accounts are closed every year on 31st December. Show machinery account for the 3 years, he said. So, when you are doing the problem, read the problem carefully. So, in this problem, if you analyze it, he has purchased the first machine on July 1, 2010 for 8 lakhs and 1,20,000 he has spent on overhauling. So, totally 9,20,000 is the cost of the particular machine. Then again, on 1st January 2012, he has purchased another machine for 4,80,000. So this is the second machine which he has purchased. On 30th June 2012, what happened? The first machine which he has purchased, he has sold for 3,20,000, and on the next day, he has purchased another machine for 6 lakhs. So totally in this problem, he has given us that he has purchased 3 problems. So if he has purchased 3 problems, in our working note, what we are going to do here is, you are going to draw one extra column here. Because for 3 machines, we have drawn 3 columns, one for total depreciation. That means in every problem, depending upon the number of machines which he has purchased there, which he has given in the problem, you should draw one extra column to write this total depreciation. Of course, here we are having date particular. So this is the format of this particular working note, so that easily you will be able to handle, okay, the matters regarding each particular machine there. Okay, depreciations, if he has sold, what he has made profit or loss, all those things easily you will be able to calculated with the help of this particular working note. Okay, come on, let's see now. I will be doing the problem as well as this particular account simultaneously, year-wise here we are doing it. Okay, don't get confused. It is very, very simple. If you are seeing the problem for the first time, if you go through that more than that once there, one or twice problems, twice if you attempt it, it will become easy to you people. Okay, see, on 1st July 2010, he has purchased the second-hand machine for 8 lakhs. So if he has purchased for 8 lakhs, on which date? On 1st January 2010, he has purchased the machine. If he has purchased the machine, write it here as book value. That means the value of the asset which you are writing in the books there. He has purchased for how much? For 8 lakhs he has purchased, and again 1,20,000 he has spent on overhauling. So what is the cost of the asset? Cost of the asset is nothing but the sum total of all the expenses incurred till we use it for first time. So 8 lakhs plus 1,20,000, that means 9,20,000 is the cost here. 9,20,000. Okay, 9,20,000 I have written here in the first machine column there. See what happened. Then the company has purchased another machine on 1st January 2012, he said. So observe here, in the year 2010, he has purchased a machine. Nothing else he has done it. So in the 2010, we should post it in our machinery account also. When machinery is purchased, what is our entry? Machinery account data to bank. So machinery account data to bank, we are writing it here, 2010. That is on January 1. You are going to write it as to bank. Okay, so totally how much? 9,20,000. Okay, See, in this year 2010, nothing else has happened. Neither he has purchased another machine nor he has sold it. So at the end of the year, he is going to provide depreciation. Now in this problem, in our last sentence, he said that he is going to provide depreciation at the rate of 10% on original cost. He said original cost means here straight line method he is following. So here what we are going to do in the working note, when he will provide depreciation at the end of this particular year, that is on 31st December 2010. Okay, write down less depreciation at the rate of 10%. Under which method? Straight line method. So 10% from January to December, total 1 year he has used it. So on 9,20,000 at the rate of 10%. 9,20,000 into 10 by 100. It will be how much? 92,000 it will be. Okay. So observe, this is the only one thing what has happened in this year. So simply draw a line here. So total depreciation in the year will be how much? 92,000 will be the total depreciation provided. Okay. So observe here, from 9,20,000, if you subtract 92,000, how much it will be? 8,28,000. So this we will call it as return down value. On which day? On the next day. Next day is 1st January 2011. Okay. Now if you go to the problem, in the year 2011 also nothing else has happened. That means neither he has purchased a new machine nor he has sold the existing machine. So once again at the end of this particular year, on which date? On 31st December 2011, we are going to provide less depreciation at the rate of 10% under straight line method only. So under straight line method, every year depreciation will calculate on the original cost year. So from January to December, totally 12 months he has used it. So on 9,20,000, once again 10% means it will be again 92,000. Okay. Come on, draw one line. So total depreciation in this year will be 92,000. Okay. Now observe here. Before going into that one, here also let's close the account for the first year. On 31st December, we should provide depreciation. So 2010, December 31st, you will write it as by depreciation. How much depreciation we have provided this year? 92,000. So 92,000. The year is completed. So we are balancing this one. Yearly we are going to balance the accounts there. So 9,20,000. From 9,20,000, if you subtract 92,000, it will be 8,28,000. So this will be your, here you write by balance carried down, which will become in the year 2011 on January 1, it will become to balance brought down. How much? 8,28,000. Okay. Now observe, again in this year, on 31st December, we have provided depreciation. So once again for depreciation in the year 2011, our entry will be depreciation account at artificially. So it will be by depreciation account. How much we should provide depreciation? 92,000. So 92,000. So the year is completed. Balance this 8,28,000. 8,28,000. Now from 8,28,000, if you subtract 92,000, it will be how much? It will be 7,36,000, which is nothing but here we are going to write 7,36,000. This will be our WDV. On which date? On 1st of January 2000, next day, 2012. So here you are going to write, when you balance this account, you are going to write by balance carried down. Next year, this will become to balance brought down. That is 2012 on January 1, it will become to balance brought down. Okay, to balance brought down, it will be how much? 7,36,000. This amount. Okay. Now we are in the year 2012. See what happened in the year 2012. Observe, go to the problem there. What is said? The company has purchased another machine on 1st January 2012. That means on 1st January 2012 only he has purchased another machine. Okay, on 1st January 2012. That means on the same day, 1st January 2012, he has purchased another machine. If he has purchased another machine, again we are going to call it as book value. Second machine, he has purchased it for how much? Purchased for 4,80,000. So we are going to write it in the second column, 4,80,000, because this is for second column. See, when he has purchased it, immediately we should post it in our account there. When asset is purchased there, our entry will be machinery account at to bank. That means on the same day. So to bank, he has purchased for 4,80,000. Okay. Now see what else has happened in this year. On 30th June 2012, the machine purchased on 1st July 2010. Which is that machine? Means first machine. Okay. That first machine he has sold for 3,20,000. On which date? On 30th June. On 30th June. That means on 30th June 2012 he has sold the machine. That means from January 1st 2012 to 30th June 2012 he has used this particular machine. Then this machine he has sold it. Since he has used it for 6 months there, we should calculate depreciation on this machine for 6 months there. So up to 30th June 2012 we are going to provide less depreciation at the rate of 10% under state line method for how many months? For 6 months. See, from January, February, March, April, May, June, up to 30th June. So 6 months if you provide depreciation, how much it will be? That means we are following original cost method or state line method in this problem. So on 9,20,000, see, on 9,20,000 into depreciation rate is 10% into 6 divided by 12. Okay, I will write it here for you. 9,20,000 into 10 by 100 into 6 by 12. If you do it, how much you will get? 46,000 you will get it. So this is your depreciation amount up to 30th June. So if you subtract from this particular one, from 7,36,000, if you subtract 46,000, it will be how much? 6,90,000 it will be. That means this is the written down value on this particular date. That means on the date of sale. Okay, the value of this machine is 6,90,000. Okay, so on this date he has sold it. So when he has sold it, you are going to write less sold for. He has sold for how much? The 6,90,000 worth book value machine he has sold for 3,20,000. He has sold this for 3,20,000. Now you observe here 6,90,000 book value machine he has sold for 3,20,000. So has he made a profit or a loss? Okay, book value is more than that of this particular sold value. So he will be making a loss. So we will call it as a loss on sale. Okay, how much it is? Loss on sale 6,90,000 minus 3,20,000. So he has made a 3,70,000 loss on sale of this particular machine. Okay, all this has happened on this particular date only. So let's account this particular one. See, on this day he has purchased the machine, we have posted it here. Then again on 30th June we should provide for depreciation. So 2012, that is on which date? On June 30th. Okay, we are going to write by depreciation, because for depreciation our entry is depreciation account data to machinery. How much depreciation you are going to provide? 46,000 depreciation you are going to provide. Then again for WDV, we have written anything, so here also you are not going to write anything for WDV. Then again on 30th June 2012, he has sold for 3,20,000. So when machine is sold, what is the entry? When machine is sold, the entry will be bank account data to machinery. Okay, so in machinery account it will be by bank account. He has sold for how much? He has sold for 3,20,000. Okay, when he has sold for 3,20,000, he has made a loss of 3,70,000 a year. So for loss on sale of machine, our entry will be profit and loss account data to machinery account. Okay, for loss on sale of machinery, profit and loss account data to machinery account. So profit and loss account data to machinery means here in machinery account it will be by profit and loss account. See, in my first video I have given all the entries there. Please go through the entries if you are having any confusion. So loss on sale of machine, our entry will be profit and loss account data to machinery. So we will write by profit and loss account. So this particular machine's calculations are completed here. Then again what happened? Observe, go through the problem there. The next day, that is on 1st July 2010. That means in the same year. Sorry, not 10, it is 12. On 1st July 2012, a new plant was installed at a cost of 6 lakhs. Plant means here machine only. So on 1st July 2012, okay, he has purchased another machine here. The meaning is that one. So once again we are going to call it as a book value when new plant is purchased. He has purchased it for how much? For 6 lakhs he said. So 6 lakhs, this is the third machine. So take 6 lakhs here. Okay. Now observe here. Then again in this year anything else has happened, go to the problem. Nothing else has happened in the year 2012 now. So at the end of the year, there is on which date? Because his year ends on 31st December. Okay, the year ending, that is on 31st December 2012. We should provide less depreciation at the rate of 10% under straight line method there. Now observe here. First machine is totally completed. Now come to the second machine. Second machine, okay, from January onwards till December, totally for 1 year you have used it. Okay, you are providing depreciation under straight line method. So under straight line method, okay, we are going to calculate on the original cost. The original cost of the second machine is how much? 4,80,000. On this 10% means it will be how much? 48,000 it will be totally for 12 months. Then again on the third machine, 6 lakhs. This machine you have purchased on 1st of July. So that means from July to December, that means 6 months you have used this machine in this year. So on 6 lakhs at the rate of 10%, okay, observe there. How you are going to calculate? 6 lakhs into 10% into, come on, for 6 months. So into 6 divided by 12. So it will be 30,000. So 30,000 will be depreciation on this. I hope you have understood this. 6 lakhs into 10 by 100 because 10% into 6 by 12 because for 6 months only you have used it. Then you will get 30,000. So the year is completed. Draw one horizontal line like this so that now you can understand. This is totally completed. Now come to this particular machine. 4,80,000 minus 48,000 if you do, you will get the WDV. Okay, this will be on 1st of January 2013. How much it will be? 4,80,000 minus 48,000. It will be 4,32,000. Come to this 6 lakhs minus 30,000, 5,70,000. Now what is the depreciation? Total depreciation in this year means, understand, on this day we have provided depreciation 46,000. We have already written here. So that 46,000 is one depreciation which we have provided. Okay, I am putting it plus because this is provided on 30th of June. And on 31st December, we are going to provide depreciation for the total of these two. 48,000 plus 30,000. So how much it will be? 8. 4 plus 3 is 7. 78,000. Okay, so this is depreciation. Now come to our account there. We have provided depreciation up to this. We have done everything up to this particular date. Okay. Now what happened on 1st July? You have purchased another machine for 6 lakhs. So in the same year on July 1st, when you have purchased the machine, your entry will be machinery account data to bank. So you have purchased it for how much? For 6 lakhs. So 6 lakhs you are going to take it here. Okay. Then again on 31st December you have provided this depreciation. So on December 31st, for that your entry will be depreciation account data to machinery account. So how much depreciation you are going to provide? You are going to provide 78,000. Okay. So this is how he has asked us to do the machinery account for 3 years. First year, second year, third year. 3 years are completed. Now simply balance it and leave it off. This is your problem there, first problem. Now if you see the total here on debit side, total of these three, you total it 7,36,000 plus 4,80,000 plus 6 lakhs. If you do it, the total is 18,16,000. 18,16,000. Now from this you subtract this. 18,16,000 minus 46,000 minus 3,20,000 minus 3,70,000 minus 78,000. So if you do it, your balance will be 10,02,000. Yes, 10,02,000 it is. So this is your buy balance carried down. Okay, so this will become the next day, that is on 2013, on January 1, it will become 2 balance brought down 10 lakhs to 2000. Okay, so this is how we are going to do the problem there. See, here only one machine is there doing this working note. Okay, if it appears difficult to you, if you are having any other method to do, you can do it, no problem is there, because it's a working note. But this is something wherein easily you can account it, because even if the number of machines are more there, if one machine is sold, another machine is purchased, or half of the machine is sold, 1/5 of the machine is sold, like that also if he has given, doing the problem will become easy if you know this working note. So according to me, if you learn this working note, it will be far better. Okay, I hope you people have understood this machine, this particular problem. Like this, X Limited purchased the machine on 1/1/2002 for 1,16,000 and spent 4,000 for installation. On 1/7/2002, another machine purchased costing 40,000. That means this is the second machine which is being purchased. So first he has purchased on 1/1/2002 machine costing 1,16,000, and again 4,000 rupees he has spent for installation. So totally the cost of the machine is how much? 1,16,000 plus 4,000 means it is 1,20,000. Then again on 1st July 2002, another machine he has purchased for 40,000. So this is the second machine. On 1/1/2004, the machine purchased on 1/1/2002 was sold for 57,200. That means the first machine he has sold, okay, on 1/1/2004 for 57,200, and a new machine was purchased for 80,000, and installation of the same and installed on the same day by paying 20,000. That means for 80,000 he has purchased and immediately he has spent 20,000 for installation. So this is the third machine. So how much he has spent? 80,000 plus 20,000 for installation. So totally 1 lakh. Show the machinery account charging depreciation at the rate of 10% per annum on written down value method for 4 years, he says. Assume that books are closed every year on 31st December. So January to December is his particular year there. So let's start the problem. So for that, this is the machinery account we are preparing, and this is the working note which I am doing. So this is the working note. So please go through this particular one. So X Limited purchased a machine on 1/1/2002 for 1,16,000 and spent 4,000 for installation. So totally how much he has spent? 1,20,000 rupees he has spent. On which date? On 1/1/2002. So 1/1/2002. Okay, he has purchased machine. So what we will call book value. Whenever machine is being purchased, you are calling it as a book value. So totally how much he has spent? 1,16,000 plus 4,000 means 1,20,000 rupees he has spent. This is the working note we are doing first. So for 1,20,000 rupees he has purchased a machine. So immediately post it in your account there. When machine is purchased, your entry is machinery account data to bank. So on this particular date, on 2002, so there is nothing but January 1. So to bank you write. To bank account, how much? 1,20,000. See, again what happened in the same day, in the same year there. Then again on 1/7/2002, that means in the same year, in the year 2002, on 1st of July, another machine was purchased for 40,000. Okay, so on 1/7/2002, another machine has purchased. So once again we will call it as a book value. It is being purchased for how much? It is purchased for 40,000. It is purchased for 40,000. So in the second machinery column we are writing 40,000. See, check it in this year. Anything else has happened there in this year 2002 again. See, on 1/1/2004 he says, that means in this year nothing else has happened. So first let's post this particular one. So again on 1st of July, another machine is being purchased. So once again our entry machinery account data to bank. It is purchased for 40,000. And again in this year nothing else has happened. That is at the end of the year, on 31st December 2002. We are going to provide depreciation. Okay, depreciation in this problem is provided at the rate of 10% per annum on written down value method. At the rate of 10% on written down value method. So WDV. So observe here 10%. from January to December. That means for 1 year this machine is being used at the rate of 10%. So on 1,20,000, 10% means it will be how much? It will be 12,000. Whereas this particular one from July to December means for 6 months it is being used this second machine. So on 40,000 at the rate of 10% means per annum it will be 4,000. Okay, for half year it will be 2,000. Okay, I hope you people have understood this one. 40,000 into 10 by 100 into 6 by 12. So on 40,000, 10% means per annum it will be 4,000. For 6 months it will be half of 4,000. That means 2,000. So total depreciation provided in this year is how much? 12,000 plus 2,000 is nothing but 14,000 depreciation you have provided. Okay, now observe here. So for depreciation, let's write one entry on this date. So on 2002 December 31st, we are going to write depreciation. So our entry will be depreciation account data to machinery. So totally how much? 14,000 depreciation you are going to write it. Okay, the year is completed. So balance this particular one. This account you balance for this year. So if you balance it, how much it will be? 1,60,000. So 1,60,000. From this you subtract this one. So 4 plus 6 is 10 means 2. 2 plus 4 is 6, 1. 1,46,000. 1,60,000 minus 14,000 is 1,46,000. So this will be your by balance carried down. Okay, which will become the next day. That is on 2003 January 1. It will become to balance brought down. How much? 1,46,000. Okay, now here you see on 1st January 2003, we will call this as return down value. How you will get? From this you subtract this 12,000. So what will be the balance? 10 minus 2 is 8, 1 minus 1 is 0, this is 1, 1,08,000, whereas here it will be 38,000. So this is the written down value. Now for written down value WDV, we are not going to post it anything there. This is nothing but the balance. The total of these two will be nothing but equal to this 1,46,000. Okay. So again in the year 2003, check it out. Anything else has happened in the year 2003? See what it says. After 2002, on 1st January 2004, he says. That means in this year also nothing else has happened. So again at the end of the year, on 31st December 2003, we are going to provide depreciation at the rate of 10% under return down value. Okay. So this is the return down value method problem there, or diminishing balance method. Under this particular method, every year we are going to provide depreciation on the balance of the asset in the beginning of the year. That means in the beginning of the year, what is the balance of this particular asset? Their first machine 1,08,000. On 1,08,000 totally for 1 year from January to December. On 1,08,000 at the rate of 10% means 10% if you calculate it will be how much? 10,800 it will be. 1,08,000 into 10%, 10,800. Then on this second machine on 38,000 at the rate of 10% totally for 1 year from January to December. So on 38,000 at the rate of 10% means it will be how much? 3,800. Okay. Now check it. 10,800 plus 3,800. Total depreciation will be how much? 14,600 is your total depreciation. So from this you subtract this one. 38,000 minus 3,800. If you subtract, it will be 34,200. Whereas from this, if you subtract 1,08,000 minus 10,800. If you subtract, it will be 97,200. So this is your written down value. On which date? On the next date, on 1st of January 2004. So for this, in this year, we should make the posting for this depreciation. That is on 31st December 2003. So 2003 December 31st. What will be our entry for depreciation? Depreciation account data to machinery. So by depreciation account it will be. By depreciation how much? 14,600. Okay. Now the year is completed. So you are going to balance this account there. Year after year, every year you are going to balance the account there. So simply balance this. Check it. For how much? 1,46,000 total is there here. So 1,46,000
Now from 1,46,000 subtract 14,600. 1,46,000 minus 14,600. It will be how much? 1,31,400 it will be. Okay, so this is nothing but buy balance carried down. This is on 31st December, which will become in the year 2004 on January 1. It will become 2 balance brought down. 1,31,400. Okay. Now go through the problem there. In the description the problem is there. As already I have told you, you should have the problem in front of you before doing the attempting the problem there. So go through the problem. What it says on 1/1/2004. On 1/1/2004, that means on this particular very day. On 1/1/2004, the machine purchased on 1/1/2002. Which machine is that one on 1/1/2002 means the first machine. Okay. So on this particular very day, on 1st of January 2004, the machine purchased on 1/1/2002 was sold for 57,200. Okay, that means on the same day when it is being sold there, here observe there, on the first of the beginning of this year only when it has been sold in this year, not even one day he has used it. On the same day he has sold it. So there is no scope of any depreciation here. So on the same day he has sold it. So what you will write? Less sold for. Okay. Which machine is sold? This particular machine is being sold. It is sold for how much? It is sold for 57,200. So 57,200 if you write it here, check it. So from 97,200, 57,200 if you subtract, how much it will be? 0, 0, 0, 7 minus 7 is 0, 9 minus 5 is 4. So that means its value is 40,000 as on the date of sale. That means on 1st of January 2004, sorry, it is not written down value. See, on this particular date, its value was 97,200. He has sold for 57,200. That means 40,000 is the loss he has made because he has sold at a price lesser than that of the book value. So this is called as loss on sale. Okay, so let's account this on the very day. So on 1st of January 2004, when he has sold for 57,200, okay, our entry will be when he has sold the machine, we are getting the money. So bank account data to machinery account. So on the same day, 2004, January 1, it is being sold. So you write by bank. It is sold for how much? 57,200. See, when he has sold at 57,200, he has made a loss of 40,000. For loss, what will be our entry? For loss, that loss we are going to transfer to profit and loss account. So our entry will be profit and loss account at R2, machinery account. So on this very day, you are going to write by profit and loss account. So this is nothing but a loss on sale. Okay, you have made a loss of some 40,000. So this is how the first machine account is closed there. Now see further what it says. On the same day, see, after selling it, a new machine was purchased for 80,000 and installation on the same day by paying 20,000. That means for 80,000 he has purchased the machine and 20,000 he has spent for installing it. So totally 1 lakh rupee he has spent it to purchase a new machine on the same day. So again on the same day, on 1/1/2004 only, new machine is being purchased. So you will call it as a book value. So 80,000 he has spent on purchasing it and again 20,000 on installing it. Totally he has spent 1 lakh rupee. So 1 lakh is the cost of the new machine. So 1 lakh we are going to write it here, 1 lakh. Okay. Now further what he says. See, show the machinery account charging depreciation 10% on return down the value method for 4 years he said. So this is the 3rd year. So in this year nothing else has happened. That is what we are going to do. First of all, let's post this for this particular one. When he has purchased the machine for 1 lakh there, our postings will be, our entry will be when the machine is being purchased. Machinery account data R2, bank account. Machinery account data R2, bank account. He has purchased it for how much? For 1 lakh. Now observe, in this year nothing else has happened. That means at the end of the year, on 31st December 2004, what we are going to do? We are going to provide depreciation at a rate of 10% under written down value on these two machines there which are there with us. So if you observe there, how much it will be? 10% if you calculate on this one. This machine is there from January to December. Totally for 1 year you use this machine. So 10% if you calculate it, how much it will be? On 34,200, because written down value method you are following, we are going to calculate depreciation on the balance of the asset in the beginning of the year. So in the beginning of the year, the balance of the asset is how much? 34,200. On this 10% means it will be how much? 3,420. That will be the depreciation on 34,200 into 10%. It will be 3,420. Then again on this particular one, you observe here, it is also purchased on 1st of January 2004 only. So totally for 1 year, from January to December. For 1 year he has used it. So on 1 lakh at the rate of 10%, it will be how much? 10,000. So total depreciation will be how much? Means, see, if you add these two, you will get the total depreciation for the year. It will be how much? 10,000 plus 3,420. There is nothing but 13,420 will be the depreciation. Okay. So for depreciation, we should make the posting here. That is on 30th of December 31st. Our entry will be depreciation account data to machinery. So it will be by depreciation. Okay, by depreciation account. So depreciation will be how much? 13,420. Okay, the year is completed. Simply balance this account there. If you balance it, you will get what is the balance. Balance left over, we will get it. Check it. The total of this will be how much? 400, 132, 2,31,400. 2,31,400. So from 2,31,400, if you subtract minus 2,31,400 minus 57,200 minus 40,000 minus 13,420. If you subtract, it will be how much? 1,20,780. This will be the balance on this particular day, which is nothing but by balance carried down, which will become the two balance brought down on 2005 January 1. It will become two balance brought down. How much? 1,20,780. This will be the balance brought down. So now here you check it from 34,200 minus 3,420. This one. If you subtract, it will be 30,780. Similarly, here 1 lakh minus 10,000, it will be 90,000. So these are the written down values on 1st of January 2005. See, he said he has asked us to do the problem for 4 years. So this is the first year, second year, third year, the fourth year we are doing. Okay. In the fourth year also, that means in the year 2005, he has neither purchased any new machine nor he has sold any existing machine. So simply we are going to provide depreciation at the end of the year. This is on which date? On 31st December 2005. We should provide depreciation. So what you will say? Less depreciation at the rate of 10%. Okay. Now see, this machine is totally sold off. No balance is there here. Now on this machine, from January to December, we are calculating under diminishing balance method or written down value method. Okay, under WDV method. So on 30,780, 10% means it will be how much? 3078 it will be. Similarly on 90,000 at the rate of 10% means it will be 9,000, because both the machines are being used totally for the year there, for 12 months there. So total depreciation will be how much? It will be 9, 10, 11, 12. 12,078 rupees will be the total depreciation. Okay, for 4 years he has asked us to do. So we'll stop doing the problem here. So we should account for this depreciation here in our account there. So our entry will be for depreciation at the end of the year. That means at the end of 2005, on December 31st, we are going to provide depreciation. Your entry is depreciation account data 2. Okay, depreciation account data to machinery. How much days? 12,078. Right now. Now see, if you balance this particular account, because he has asked us to do for 4 years. So for total 4 years we should do, and we should get the balance there. So if you balance this one, how much it will be? Check it. So 1,20,780. 1,20,780. So from 1,20,780, if you subtract 1,20,780, from that if you subtract 12,078, if you subtract, the remaining will be how much? 1,08,702. So this will be by balance carried down, which will become In the year 2006, on January 1, it will become 2 balance brought down. 2 balance brought down, it will be 1,08,702. Okay, so this is how we are going to do the problem. I hope you people have followed this. It is a very simple problem. Okay, I am showing this working note. Don't get complicated by seeing this working note. It is a very simple one. See, for each particular machine, we have allocated one particular column here, so that right from the beginning till the end of how the depreciation is calculated, what is the balance that we will be reading it in each column there. So instead of doing working note each year separately, we are doing it in one particular statement form. That's all. Okay. So please go through this working note. Please try to follow me. I want you people to go through these two problems. Okay. If you are able to handle this, say first problem I have done on straight line method. This particular problem I have done it on written down value method. See, under straight line method, what we will do every year we are going to calculate depreciation of the original cost. Whereas under written down value method, okay, every year we are going to calculate depreciation on the balance of the asset in the beginning of the year. That means in the first year we will calculate on this one. Next year on written down value we will calculate. Then again on the third year we will calculate on the written down value. Like that every year in the beginning of the year whatever is value is there, on that we are going to provide a depreciation under written down value method. Okay, there is the only difference here. See, now and then we will be getting some particular transactions, something just like dismantling charges are incurred. Okay. Just like when he has sold the asset there, if he has incurred some dismantling charges, how to account it for? Don't get complicated there. Simply think of, if dismantling charges are incurred, what will happen? Okay, we will be incurring some expenses. So we should add to the balance of the asset on that particular date. That means if, take for example, if this is the written down value, on this date for dismantling this machine, if he has incurred some 1,000 rupees, what we will say? There is an expenditure we are incurring it. So dismantling charges we will add to this. Okay. At that time, what entry will write? Asset account data to bank, because there is the expenditure we are incurring it. That means in the machinery account we are going to debit it. Then after that, depending upon the situation, okay, on which date it is being sold, depreciation if you deduct it, the written down value is on the date of the sale you will get it. Then again for when you have sold it, you will be making profit or loss. Exactly in a similar pattern we are going to account it. Okay. For everything, simply what I say to you people is don't get complicated, don't get anxiety, okay, by going through the problem then. Okay, coolly you think of, you will be able to know it, what to do it. Okay, just like if asset is purchased, what is the entry, if asset is sold, what is the entry, if I am incurring the expenses for the asset there, what entry I should write it. Like that, go on thinking it. Okay, so that it will become easy to you. Okay, so these two problems I have given it. And one more problem is there in the description there. I want you people to attempt it. Okay, if you are having any problem, you can ask me. Okay, or you can comment it to me. Please do subscribe to my channel. Okay, again I am going to give some 3 more problems there. Okay, 3 or 4 problems, because exams are fast approaching. I am going a bit faster there. Okay, don't get complicated, because still up to final accounts I have to complete it till you write the exam there within 1 week there. So please do be in touch with my channel there. Please do subscribe. Do share it. Thank you very much.